You're listening to the Master Passive Income Podcast Network. Welcome to the Master Passive Income Show. My name's Dustin Heiner, and I'm here to help you get financial independence, quit that JOB, that just over broke job, by investing in real estate so you never ever have to work a job again. And today, I am super pumped to be sharing with you about how you can invest in commercial real estate, play Monopoly in real life, get apartment complexes, get storage facilities, get mobile home parks, you name it, anything commercial, you can get it with the help of other people, and we're going to show you how to do it. All right, let's start the show.
Welcome to the Master Passive Income Podcast, where we talk about investing in real estate with a special focus on making enough money so you can quit your job and live the dream life. And now, here is your host, Dustin Heiner.
What's up? Super blessed as always to have you here with me on the show. Now, I was thinking the other day about where did pension plans go? Okay, now track with me here. Way back, 50 years ago, all companies used to have pension plans. Now, the pension plans were retirement plans for people who worked at a company. Now, the government still has pension plans. The government employers like, local and state and federal government still has a pension plan where when you retire, guaranteeing you a lot of money that they have to make sure that you get over and over again. In fact, I work at a local county government in California, and I got a pension, which means we paid into it. Don't get me wrong, we paid into it. But when I retire, when I'm at the right age, I'm going to be getting a lot of money just coming in. I didn't have to invest that. They took care of that. And at the same time, there were lots and lots of people. In fact, my boss, he was the assessor. He literally retired with 120% of his take-home pay. I used to work at a local county government in California, and I got a pension. And now we paid into it, that's for sure. But the government guarantees that you're going to be getting that retirement every single month. And it's actually really, really nice if you're a regular employee. My boss got even better. In fact, all the people that work in the government did this. They would work a certain amount of time as well as put in a certain amount of overtime. And then when they retired, for the rest of their life, they would get 100% of their take-home pay in their pockets. Then they wouldn't have to pay Social Security because they're not drawing on Social Security anymore. They wouldn't have to pay for Medicare because I guess they bought Medicaid, the old people life insurance, health insurance. And this is something that regular companies had that they changed because the companies got wise. Now, who owns big companies? Well, wealthy and rich people do. And who writes the laws that we apparently try to vote on, yes or no? But who creates the laws? It's the rich people that get into power. So what happened? Where did your 401k and IRA come from? Well, where did the pension plans go? Well, remember, every single company, I won't say every, most big companies had a pension plan. Well, the rich people got together and said, why are we putting all of the burden on ourselves? Like, why are we making this pension plan where we have to manage the pension, where we have to make sure that we guarantee people make money, make sure we don't lose money, and get taxes and all that stuff? They were realizing that there's a better way for them to make money off of you as an employee. So they created, and it's a tax code, the 401k tax code. We know it as a 401k. We just think of that. But that's not anything other than the code or the IRS line item that gives us the ability to store money for a retirement account. Now, here is the sad thing. Everything in the pension was now transferred over to us as employees by the rich. So now we have to manage our own retirement. We have to put money into our retirement. We have to make sure that it's actually making money. If it loses money, oh well. If we get taxed, oh well. If it goes under, oh well. It's now off of the rich and all the pension plans. Now, here's another diabolical thing. They thought, well, how can we get this money from our employees? Like, they're going to have it for retirement, but we wanted to use it and have it for ourselves. So they said, well, let's make sure these 401ks, retirement accounts, can invest into our stocks, our company stocks. And so they created this, that you invest in a mutual fund. That mutual fund takes money because they get fees out of it, and your 401k gets fees. And those mutual funds invest in stocks, those big companies that you are working for, and they're just making money hand over fist. Now, the reason why I bring this up is because you can actually use your 401k, your IRA, to invest in real estate and to invest in other people's deals. Now, you guys know I closed recently on a 355-unit apartment complex near Nashville, Tennessee. Phenomenal deal. 60% of the market value is what we bought it for, so we captured 40%. Great loan, 7 years. It is a 5.86% interest rate. Well, it's a great deal. Huge property. And if you couple the ideas of your retirement account being stolen from you by the rich, instead of doing that, moving it over to real estate. Now, you might be thinking, I have more money than time. Like, I don't have time to build a business, which I completely understand. You can even use your self-directed IRA to invest in other people's deals. And that's why we're talking about multifamily or commercial real estate investing today, is because when you are wealthy, when you have plenty of money, but you have very, very little time, you can't do it yourself. Well, how much better would it be if you get an expert like myself, that we are doing investing, but we open it up to certain people that we would like to have invest with us? Then you can get the benefits of ownership and the return. And when we sell the property, you make a great, lots of money. In fact, you get 2.5% is what we're shooting for in selling a property. Plus you get the depreciation. You get all the ownership benefits of this property. And you can use your self-directed IRA, your 401k, to do that. And when you have multifamily, when you have apartment complexes, when you have storage facilities, also even mobile home parks, commercial buildings, all of these things take a different type of loan. And this, well, when I say different type of loan, I should finish that thought. Sorry. It's not a conventional loan where you're getting a 30-year fixed. No, it's a business loan. A business loan that is a commercial loan, and it's for a shorter duration, 3 to 5 years. We were really blessed. Got a 7-year Fannie Mae loan, which is very, very hard to get. We got that, so our deal is literally locked in for 7 years. It's terrific. Now, when you invest in a commercial property, as an investor, like me as an investor, well, we needed to raise $12 million. Well, I don't have $12 million. I know my 3 partners didn't have $12 million, but collectively, we had a lot of other people that we know that trust us, that know we're investors, that we will do our best to make sure they don't lose money and they make their money, and then they invest their money into these commercial properties. You make so much more money when you invest your money, if you're doing it passively, because passive investing is phenomenal. You just make money without doing anything. But if you were to take that money and put it into a single family home and have somebody else run it, you're not going to get that great of a return. And you're going to have some little headaches and things you have to work on. Instead, if you want to park your money, when I say park, invest your money. It's a little, I guess, tongue-in-cheek saying invest your money. And like my property, you get 8% return a year. If you put in $100,000, you're getting $8,000 back. And we pay that out quarterly. So $2,000 a quarter, $500 a month. And we're hopefully going to exit in 5 to 6 years at 2.5 times our money, which is great. So if you're a real estate investor, or if you just have extra money that you know you don't have the time to actually build a business and do it right, it would be fantastic if you invested with somebody else. Now, this episode, we're talking about if you're going to invest yourself, if you want to be the real estate investor, if you want to tackle these large apartment complexes, anything above 5 units and above is an apartment or multifamily. If you want to get storage facilities or even mobile home parks, you name it, anything commercial, you're going to need to be able to raise money, underwrite the deals, which means you make sure you're not going to be losing money, but you're going to be making money, and manage the property, or not necessarily manage because you're going to hire property managers, but it's asset management, making sure that the property has great roofs, that it's like furnaces are not going out, all that sort of stuff to make sure that the property is going to be doing well, and also repairing it, getting it better. So that's why we're bringing on a fantastic real estate expert. In fact, he is a coach here at Master Passive Income. He is starting his own podcast, be coming out really soon, maybe in the next week or two. It's going to be the MPI Multifamily Podcast. MPI, Multifamily Commercial Real Estate Investing Podcast, where he's going to be teaching on how you can invest in multifamily properties, in commercial properties, and we are even putting on a brand new conference, the Rubicon Multifamily Conference. You have to be at it because we're going to be talking about passive income, how to invest your own money in passively, as well as how to actually do this real estate investing thing yourself. Go to Rubicon.com. Actually, I'll just put all the links in the description. So anytime I give you links or tell you about something, it'll be in the description. So you got to check this out. Now, I'm bringing on a good friend of mine who's now a part of Master Passive Income. He's now a coach here, helping people to invest in multifamily properties. I have Charles Seaman of Master Passive Income, the MPI Multifamily Podcast, showing us how we can invest in multifamily, be successful, and make even more money doing it. All right, here we go. Charles, great to have you here with us.
Dustin, it's a pleasure to be here. Thanks for having me on.
Man, this is great. So you've came and spoke at Rubicon 2 different times now, and I've seen everything you've done from having weekly, like everybody listen to this, literally weekly free coaching calls for people for years now. Even on Christmas Day, you did New Year's Day, you've done it. But you're such a giving person. That's the one reason why I said, you know what, Charles would be a great fit, is because you give just like we do. So not everybody knows who you are though, and your background, even though you're a multifamily investor, commercial estate investor, over thousands of units that you've bought and control and be a part of. But at the same time, you probably didn't start there. So give us a little background on what got you into commercial, and then fill us in on where you're at now.
Yeah, great question. So I probably took a little bit of a different path than most. I actually did start there, but I had a little bit of a head start. So I had 12 years of experience working for a guy who was a commercial real estate investor in New York City prior to jumping in and to looking at my own deals. So I had the benefit of, learning under somebody who was very seasoned, being able to really hone that ability and then take that and do my own deals afterward. So when I first started, the gentleman I worked for in New York, I was 20 years old, and I wasn't really looking to get into commercial real estate, but I was broke and I needed a job. And at that point, that was the best opportunity I had on the table, and I wound up going to work for him. And he had several different businesses, and one of those businesses was owning and operating commercial real estate property. And that was something that always intrigued me because of the different industries I had exposure to there. Whatever reason, commercial real estate always spoke to me, and it was something that drew me in, and I enjoy it. So that led me down the syndication path. And fast forward kind of to where I got into that. Initially I dabbled into the single family at the wholesaling, but what I realized is I wasn't good at those, and I didn't enjoy that because I already knew what I was doing. And I'm like, boy, I'm doing these big deals at work and I'm going out, and now I'm starting with smaller deals. I felt disappointed, but I also knew that I didn't have the budget that the guy I worked with did. So obviously that's an important piece of the puzzle. So fast forward a little bit further, after I get into single family and wholesaling, I determined after about a few months, those really weren't the right fit for me. Then I took a step back, just continued working my job. And after about a year, I discovered syndication. And if you're anything like me, you probably think syndication has something to do with television, maybe the mafia, but not usually real estate. So what it has to do with real estate is that you're pooling resources together to do bigger deals than you might be able to do on your own. And I knew that I had the expertise and the skill to go out and do commercial real estate deals, but I also knew that I didn't have the checkbook to do it, so I needed to utilize other people's money. And I started learning about syndication, and I eventually left my full-time job and went in syndication full-time in 2019, and I've been doing that since. So that takes me to where I am now. And then just one deal at a time, you start building your reputation, your track record, and you got to keep in mind it's playing for the long game.
Would you suggest somebody to jump right into the commercial real estate? Not saying you should or shouldn't. I'm just curious because I personally loved going residential, getting in my nest egg, and then having extra money now to put into commercial and apartment complexes and hotels and stuff like that. But it sounds like you jumped right into the deep end. And see, deep end, it's harder. That's why it's called the deep end. But what are your thoughts? Should somebody jump right into multifamily?
Great question. So I would never tell somebody not to, but here's what I would tell somebody. Doing it the way Dustin did it is a lot smarter.
And I want to pause for a quick second and share that honestly, I really want you to invest in real estate. Now, my new goal is to help 1 million people invest in real estate. So, two things I would ask from you. Number one, if you get anything out of this episode, please share it with somebody else. Just say, hey, check out Dustin and Master Passive Income. He really wants to help 1 million people to invest in real estate. That's number one. Number two, I want to get you to invest in real estate. Get my real estate investing course absolutely for free. Text the word rental, RENTAL, to 33777. Rental to 33777. I'll literally give you my course, show you how to find an area of the country to invest, how to build the business first. I always talk about that, and how to find the right properties, how to make sure you're getting experts to do the work for you, and scale the business to where you're making $250 or more in passive income. Scale it to quit your job. I'll literally get to you, or go to masterpassiveincome.com/free course. Obviously, it'll be in the description, but I really, really want you to invest in real estate, because the more that actual normal everyday people own real estate that are good landlords, the better everybody's life gets.
So building up that financial security and giving yourself the stability you need is going to be very important. So in this business, there's usually two reasons people fail. They run out of time, or they run out of money, or a third reason, both. So usually, if you can give yourself enough leeway financially, you can usually buy yourself enough time to be successful in this business. And it's got to be very tough to be successful overnight. I don't know a single syndicator or multifamily investor or commercial investor that's been successful overnight, but most of them have been successful over years and years, in some cases, decades and decades. And that takes time. So you got to be able to position yourself well, and having that strong single family foundation can give you the consistent cash flow coming in month after month to support yourself and to be able to go out and do bigger deals.
If you were to jump into multifamily and start doing that route as opposed to going to the single family home, which I personally love, like the people getting into single family because you get some steady income, which is great. Now jumping right into multifamily, it seems like there's a big learning curve, because obviously raising capital, raising money, getting other people to invest in your deals, finding these big apartment complexes. Is there any one way that you would suggest if somebody wanted to get started in commercial? Is it finding deals? Is that the hardest thing? And then you should start there. Underwriting. What are your thoughts?
I've been seeing a lot of posts on LinkedIn about this very subject matter recently. There's differing opinions. My opinion is the capital is always the driving factor. Within syndication, if you have access to money, whether it's your own money, whether it's somebody else's money, you will have no shortage of deals or operators to choose from. Just about every operator out there needs money for their deals. And if you have access to that, you'll be welcome in any one of their deals.
I've heard recently that the deals are drying up. And the big reason why is because interest rates are up. Prices are still pretty high. Syndicators have come in and they just kept buying and buying and buying it over on top of each other. So the price kept going up. And there's a shortage of deals, meaning people are trying to sell them, but you just can't buy them because it's not going to make money sense-wise. So what are your thoughts about with the market right now? And then how is that going to happen in what's going to happen in the future, metaphorically? Or like I don't want you to feel like you're being held to account if it doesn't come true, but just tell me what your thoughts are about the market.
Yeah, absolutely. Well, I think you summed up the last 2 years in the multifamily space in a couple of sentences. That was excellent. So there's a lot of sellers that want to sell, and there's a lot of buyers that want to buy, but the prices the sellers want to sell at are very different than the prices the buyers want to buy at. So there's still a pretty big gap. And what that means is transaction volume is down significantly from where it was 2 to 3 years ago. And market conditions have changed. We've kind of hit a ceiling in many markets where rents have flattened and in some cases started coming down. We have interest rates that are higher than they've been in probably a decade and a half. And we also have a lot of debt maturities coming up. So my personal perception of the market is that there's going to be a lot of pain. But I think that pain is also going to be what creates opportunity. And the challenge right now is that you have, on the sell side, a lot of sellers that are running out of time. A lot of sellers who purchased in 2021 and 2022 with short-term debt, and that short-term debt's coming due. And so far, a lot of lenders have been working with those sellers and those borrowers, but there's no guarantee that's going to happen indefinitely. So you may be faced with some sellers that need to sell at discounted pricing. Some of them are going to be selling deals at or below the mortgage amounts, and that's where your buying opportunity is going to come from.
I personally think there's going to be so many great opportunities coming here really, really soon. I mean, I actually really am excited that interest rates are really, really high because that changes the market. It prices on
Right.
people who shouldn't necessarily be buying. And there are many properties that are still out there. They're going to be great as long as you get the right deal. Like I just closed on a 355 unit apartment complex. Great deal. We got it 60 cents on the dollar because the seller was needing money for another property that they were having, building and doing another project, which is great for us, great for them too. They doubled their money. They held it for like 15 years, but we got it for a much greater discount because they needed the money fast. So deals are out there. Now, I'm curious, what made you want to come over and start helping out with Master Passive Income and coaching people? Like what is the main reason? Because you could be doing your own real estate investing. You could constantly just go out and, get your own deals and all that sort of stuff. But why do you go to RubeCon to speak? And then now why do you want to be a part of Master Passive Income?
Well, I have to give a shout out to my good friend Charles Rose Jr. because he initially connected me with you and with the Master Passive Income brand and Rubicon. Um, One thing that's always stood out to me is just the feel when you go to the events. I think it feels like a family atmosphere. It feels like people are welcome to come, and that you genuinely want people to succeed. So that aligns with a lot of the same values and beliefs that I've always had, and I thought it was a great fit.
Fantastic. And I've always wanted people to grow into multifamily. All my students, I wanted them to get into multifamily hotels and apartment complexes, storage facilities, but I don't want to teach that stuff. Like that's a whole nother level when you're teaching that stuff. It's so much more to learn. And I thought, you know what? I really would rather have somebody else teach that and come to you right at the great time saying, hey, I'd love to help out. I said, this might work out really well. And after chatting about it, it's like, this works out great because I have so many students that graduate out of, the single family homes. They're like maybe, 5, 10 properties. And they're like, you know what? I want to get into other asset classes. I want to do, mobile home parks or apartment complexes or something like that. And I said, well, I'm not your guy. Let me point you to somebody else, which is great because I have a lot of friends. But now it's like, you know what? At Master Passive Income, we're helping you every single step of the way to be a well-rounded investor. Because in the journey as being an investor, you start, and then as you go through your journey, you grow and you get better and you see things that you might want to try out, or you might, meaning I want to start working on apartment complexes now. But in thinking about like commercial, Charles, there's a lot of ways to make money. Now, when you buy one single family home, you capture equity, which is great because it's your own property. You make cash flow, a lot of other great things like appreciation, all that sort of stuff, mortgage buy down. You get those sort of things when you invest in multifamily. But when you are, because there are a lot of transactional costs that are involved, like somebody brings the deal, whoever finds the deal, kind of like a realtor, they get a certain percentage because they worked hard to find the deal. And then people that raise capital, raise money, they get other investors to invest in their deals. They get a cut as well. Walk us through how people like the benefits of investing in multifamily, especially since we're not going to be the sole owners of these properties.
Sure. Well, if you're using a syndication model, there's really three primary ways people are making money. And there's a few that are less common. We'll stick on the three most common ones. The first one's going to be from fees. So there's different fees that you have throughout the course of the deal. The first one is typically going to be an acquisition fee, and that's going to be paid shortly after the closing. And that's usually, for all the work that's done on the front end to find the deal, to structure it, to put it together, for due diligence, raising the capital. So it's basically a fee that's, paid to the sponsor team, so that way they have money to keep going. There's also fees on the back end. So if you refinance or if you sell, there's typically what's called a capital transaction fee. It can also be called a disposition fee or a refinance fee. And usually that's going to be a percentage of the sale proceeds or the refinance based on whatever the strategy is. You could also collect asset management fees along the way. That's typically for the person or people who are doing the ongoing work, because asset management is going to have a lot of ongoing work and a lot of time that you have to spend on a regular basis with that. Then the second way is cash flow. So with cash flow, what happens is normally the way these deals are structured, they're structured in a way that the people putting up the money are going to be the first ones getting the cash flow return. And if the cash flow exceeds that amount, then there's typically a portion that's paid out to the sponsor team, and you're able to take that portion of cash flow as well. And then the third way is when you exit the property through a sale and you participate in the upside profit on the sale. So essentially, if let's just use random numbers. Let's say you go out there and you buy a smaller apartment complex and you sell the property and there's a profit of $500,000. If you own 30% of that deal, then essentially that profit's going to be split where you wind up getting that piece of it on the back end.
That's terrific. Now, there's so many different parts to multifamily or commercial. I mean, it doesn't have to be apartment complexes; it can be any type of commercial. That's what. So when we say the word, for everybody listening, when we say the word multifamily, we're using that somewhat synonymous with apartment complexes, but at the same time, in the context that we're using it, it's also commercial. So if we're having the conference, the Rubicon multifamily conference that we're putting on, it's not just apartment complexes; it's storage facilities, mobile home parks, office spaces, like you name it. It's everything commercial.
Mhm.
And you need to understand that we're looking at, and the big reason why, and Charles, correct me if I'm wrong, the bigger reason why commercial is so different, multifamily apartment complexes and stuff, is because of the financing terms.
Right.
And that's
That's a
one
good one.
huge. Yeah, go ahead. So talk to me about the financing terms because that's so much different than residential.
It totally is. So the reason that you'll have more distress on the commercial side than you will in the residential side is because of the financing. So in the residential market, oftentimes your loans are 15 or 30-year terms. But on the commercial side, usually they can be anywhere from 2 to 12 years. And if you're looking at short-term financing, it's typically 3 years or less. If you're looking at long-term financing, it can be anywhere from 5 to 12 years. So what does that mean? Well, when you have financing that lasts 15 or 30 years, usually you have the ability to ride out any market cycles because most market cycles do not last that long in real estate. But the challenge is when you have debt that's 3 years, 5 years, 7 years, your market conditions could actually change in the middle. And sometimes you don't have enough time to weather that storm, and that's when you can get caught. So you have to be very smart when you buy. They always say the one mistake you can't correct is buying wrong. So you got to be very cautious on the front end. Make sure you're not overpaying and that you feel good about the price. So that way, even if the market conditions change, you'll still be in a good position and able to weather that storm.
And that's a big reason why I went forward with this apartment complex that I have. Number one, it's really discounted, 60 cents on the dollar. But the mortgage, it's a 7-year term, 5.86, I believe. And we underwrote it at 6.18. So on a $32 million loan, that's a huge discount, or no, that's a lot of money saved because we got a lower interest rate, but it's a
Right.
70-year Fannie Mae. So send your Fannie Mae loan. We can ride out the next, I think, economic cycle. Plus, we bought it so cheap that even if we had to fire sell it, we're still going to be able to either break even or make a little bit of money.
Yep.
So when you are looking at, because you're well known for underwriting, underwriting is not something like that's not my strong suit at all. Like I'm not a numbers person. I hate looking at spreadsheets. But even though that's not necessarily your forte, but you're known as that because you've been doing it for so long and helping people to do it. So walk us through what underwriting actually is and how we can do that well.
Absolutely. Funny you say that. I never really intended to become the underwriting guy, but it's kind of become that way. So underwriting basically is it's basically determining whether or not the deal makes financial sense. So what you're doing is you're taking the existing financials from the seller, and in some cases you might be building your own pro forma out going forward. And what you're seeing is based on the way that you're looking at the deal, what price do you need to pay for that deal to make sense? And sometimes that price could be, close to the asking price or close to what the seller wants. Other times it might be far off. In the last year or two, it's probably been far off many times. Uh, but, it lets you know where you need to be. Now, keep in mind, just because a seller wants a certain price for an asset doesn't mean it's actually worth that. So you have to keep that in mind. And, your job isn't to go out there and to buy somebody else's problem so that it becomes your problem. Your job is to go out there and buy it at the right price so that way you can protect yourself and any investors you might have in the deal.
I love it. Now, what is your process in finding deals? I mean, that is probably one of the hardest things for most people is, well, let's make sure we find an apartment complex or a hotel or whatever commercial facility. But I found that's usually not the hardest part. There's many other hard parts, but
I agree.
in finding the deals, what are your thoughts?
Well, the biggest thing is you got to be talking to people. You got to be networking. So all of my deals in the past have come from broker and seller relationships. And most of my deals in the future will probably come from those same relationships. So what I would also say, I would add a few more relationships. You can get them from lenders, you can get them from property managers, you can get them from appraisers. And you might be saying, how do you get deals from those people? Well, you'd be surprised. They're all connected. Lenders for me are my favorite one right now, because I'm personally targeting distressed assets. And the ones that are going to have distressed assets are lenders, because eventually they're going to be taking those assets back. In some cases, they've already taken them back. So those are opportunities that I like to focus on. Uh, Property managers, why would they have assets? Well, most times, if you have a smart property manager, they can see the writing on the wall when a property is not doing well. And a lot of times they're motivated because they want to keep the management contract. So maybe they have a conversation with the owner and say, "Look, would you want to sell this?" And they try and sell it to one of the other clients they have in their management portfolio. And that can happen with properties that are performing well too, but it's probably more common with ones that aren't performing well. So sometimes it happens where they can make a deal. Appraisers, sometimes that happens because lenders rely on them. Lenders may sense trouble at an asset, and they may reach out to an appraiser and ask for some valuation questions. And maybe the appraiser's heard that something's in trouble through the grapevine, so they can be a resource. So, all relationship building. If you're looking at smaller properties, and when I say smaller, for context of multifamily, let's say 50 units or less, you can probably still do a lot of direct to seller contact. The same techniques that you would use with single family or small multifamily probably work up until about 50 units. You can use direct mail, you can use cold calling, you can use Facebook ads. The larger the property, whether it's multifamily or other commercial assets, the less likely you ought to be successful with those. And most of those things are going to go usually through a broker or sell it to buyer, but you'll need to be reaching out with a pretty credible track record to get their attention at that point.
Tell me about your podcast. Now, that's something that you've been on other podcasts before. You're starting your own podcast, which is going to be a part of the Master Passive Income Podcast Network. We've got 5 other shows, and I don't even want to dare to tackle multifamily and commercial just because there's so many moving parts, so many other people. And I've literally only done a couple deals, and I don't feel like I would want to teach that. But on your podcast, you are teaching people how to invest. You're also doing interviews. But talk to us about your podcast.
Absolutely. So the podcast is going to be something that people can tune into, and they can pick up little snippets along the way. So we want it to be easy listening. We want it to be something people can, listen to when they're in the car, when they're in the gym, wherever it might be, and gain some type of golden nugget they can walk away with. My thought with any piece of media, even if they don't absorb everything, absorb something. And if you take a little piece each time, those little pieces start to add up, and eventually you can do bigger things with that.
And there is a reason why you have literally week after week after week of people showing up to your underwriting calls. I mean, free underwriting calls, which is super generous, by the way. I was just blown away. I went to a couple of your calls. I'm like, man, you got a lot of people on here and you're not charging. It's so generous. And now with having you become a part of Master Passive Income, our students are going to get access to that as well. But this is great, Charles. Now, the podcast is called the MPI Multifamily, where we're focusing on all types of commercial. And so I'm really, everybody, if you want to start getting into that expert level, I guess, what you would call expert is when you're doing more assets and you're growing and you're trying to look at multifamily. By far, one of the greatest resources we have is all the education we're putting out. We have the course, as well as we have Charles Seaman that's going to be doing all the coaching, helping people to invest. And here's a great thing. Because we're in multifamily, we also have a lot of people that want to invest with us. Any deals that we get, we're going to be sharing with you guys. Hey, you want to come and take part of the deal? Then you can invest with us and we'll give you the terms and everything. That's what I did recently to get that property over in Nashville or near Nashville, was sharing with everybody. Hey, I have this opportunity. If you want to take part, let me know. And so it's just great to be able to help more and more people to invest in real estate. And Charles, you know that my goal is to help 1 million people to invest in real estate. This is just another way for us to invest in real estate. Is there anything else we might have missed in chatting with you about, either the coaching or even anything about multifamily and commercial investing and even the conference?
Dustin, like always, I think you nailed it, but we may as well do a plug for the conference because we want people there. And if you want to learn and you want to network, that's the spot to do it. So November 7th, 8th, and
Absolutely.
9th,
Yes,
Denver,
November
Colorado.
7th, 8th, and 9th. And Charles and myself, Charles Rose Jr., William, we all have multifamily experience, as well as passive investing. Zach Zimmer's going to be there. We have other amazing speakers that are going to be there. It's the Rubicon Multifamily Conference. We originally had a different title for it or name for it, but it really worked out to where we say the Rubicon Multifamily. That's just, it tells you everything. Real estate wealth building in multifamily, it's what we'll be doing. But you can go to rubicon.com. Link will be in the description, and use a promo code podcast, and we'll literally give you the 10% off so you can get your pass. But it'd be great to have everybody there. It's going to be such an intimate setting. Everybody learning about commercial. But Charles, how else can people reach out to you? Obviously, we know about the podcast. Any other way that people can reach out to you?
Absolutely. So they can reach out, email. So they can reach me at Seaman, my last name, Seaman, at masterpassiveincome.com. And I also have a Linktree link, which I will drop in the show notes.
Charles, I'm super pumped to have you a part of Master Passive Income, seeing the vision of where we're going, trying to help people invest. So I really appreciate you being with us.
Likewise. Thanks for having me, Dustin.
And that is it for today. Go ahead and get my free real estate investing course. Text the word rental to 33777, RENTAL to 33777. You can also join my Real Estate Wealth Builders group coaching. Get all my courses. All right, guys, we'll see you in the next show. See ya.